A top-heavy market, big tech earnings, and a hawkish Fed. We got it all today on the Weekend Update.
Okay, so let's talk about all the action that happened this week. First up, let's take a look at the market. So what I'm showing you here, this is the S&P 500 in the way that we've been looking at it. Red line is S&P 500. Purple line here is the 200-day moving average. Things look good. We're past all-time high watch. We're in the world of all-time highs. So that's good. If you'll notice, in the last week or so, right around the time that I was starting to warn about a top-heavy market, we're starting to see a little bit of congestion here. And so what I wanted to do today was to look at two sides of the coin. The factors that might argue for a little bit of a consolidation here, and the factors that would argue against a little bit of a consolidation. So here's what we know. This is the fourth quarter 2023 earnings per share revisions. And what I'm showing you here, big tech just reported their earnings and they were fantastic. And that's really good for the market. So this is a positive for the market. The largest weights of the market are pretty much in the Magnificent Seven. So it's Microsoft, Google, Amazon, Meta, Apple, NVIDIA. Who am I forgetting? Did I say Amazon? Anyway, the Magnificent Seven, you know them. So these stocks are doing really well right now. And they just reported their earnings, and earnings for the most part was pretty strong. Tesla, that's who I was forgetting. Sorry about that. Anyway, so they reported earnings coming in very strong, and really these businesses are doing really well. And that's good. That should keep the indexes aloft for a bit because these guys are the heaviest weights. However, if you look at the other businesses inside the index, so here's the S&P 500 and here's the other 493 stocks, what you notice is these are the businesses that are starting to feel the economic slowdown. The Magnificent Seven, we're really not seeing that out of their earnings, outside of maybe Tesla. But the primary reason for that is these guys are unregulated monopolies. And it's really profitable to invest in unregulated monopolies. And when you're an unregulated monopoly, you have a really great business. So like the fact that these guys are doing great really doesn't give me too much of a read on the economy. You really need to think about them as they're sort of like a middleman, the entirety of the economy has to flow through these guys and their businesses because they control everything pretty much. But for the pedestrian businesses down here, the real businesses that have to operate in the real economy, things are going to be a little tough. But earnings were strong for big tech. So it's definitely a positive for the indexes. If the little guys are in trouble, that's okay. We really aren't impacted by the little guys too much. So the strength of big tech and what we're seeing out of their earnings is definitely a positive for the market. How about the negative? Well, the biggest negative that I can think of, and this kind of goes with that idea of a top-heavy market, right? The Magnificent Seven are doing all the lifting here. The other big negative that I can think about is seasonality. So this is 2-week S&P 500 return since 1928. And what it shows us is the single worst 2-week period from 1928 to now is the second half of February. So if you were to ask me, and remember, seasonality isn't gospel truth, but if you were to ask me, when do I think that we're going to start to see this consolidation? When do I think we're going to feel it? When are we going to be in it? Anytime after February 15th, just because of regular seasonality, plus we've got a top-heavy condition. And as we saw in earnings, there is economic slowdown going on. You just can't see it in the Mag 7, but you can certainly see it in everybody else. So seasonality tells me I think we're going to go through a consolidation period, completely normal, healthy, fine. I was also very interested, I think, one of the other factors that I think strengthens this idea that we're going to have a consolidation is the Federal Reserve coming in pretty hawkish. I don't think we're going to get the rate cuts anywhere near what the market is anticipating or as soon as they're coming. So I think we'll have a little bit of consolidation. Totally fine. The move off the market has been so strong that I'm actually hoping we get one. I don't want to blow off top. So there you go. Things look good. Earnings are good. The Magnificent Seven are doing great. And those are our largest exposures. So it's a good time to be us. I'll see you next week.